All right, hey guys, hope everyone's doing well. So I want to talk a little bit about some of the trades that I'm in right now, why I'm in them, few risks that we need to look at, and kind of what's my end goal. Okay, so I'll start with current trades and or positions that I actually have been on since. So one position or two positions I've been in since like late January or late June, sorry, and the recent current trades that I'm in are actually today. Okay, so the first one I'll talk about is UK 100. So currently we have this pretty strong sell right here. So I'm not going to be buying into that. So we'll wait. Hopefully, I don't have to wipe my profits out. That would be very, very sad. But if I have to, then there's really not much of a choice. I have to accept the risk here. So I have a trailed stop right here. So my plan is if we can take out this high, then I'll put the stop below, right? Reason why I'm in this position is because of some pretty decent data coming in on the pound or for the UK. For the most part, economic growth has been pretty strong, right? We've been getting good services PMIs, retail sales at 1.2%. Let we just need to let this load, but it's at 1.2%. Consumer confidence -23. CPI also came in a little bit softer, so still elevated, but we're seeing some easing coming in. And really, the real risk for the UK is the uncertainty with Iran and the US. Okay, so they've both been back on the fighting regime again. So if there's gonna be more escalation, then this is going to flop. Okay, it doesn't help that a lot of stocks are overstretched. The Kospi has also been kind of selling off. Didn't really fully affect the FTSE, but yeah, we're seeing a lot of red right now in stocks, or in indices. Okay, so if we have escalations on top of that, this is not going to be a good. It's not going to be a happy trade. Okay, so I want to wait because this is actually where I would like to scale in, but at the look at how it's selling off, it's not. I'm not really a huge fan of that. I gotta be honest with you, right? So what do I want to see? I want to see a pullback at least with a close of that. That's what I want to see. Okay. If I don't see that, I'm not gonna buy into this move. I don't care. I don't care if I have to waste a little bit or I'm not gonna do that. Okay. Um. So that's that. The trades I'm currently in now is Euro longs, gold longs, and I'm also in the Kiwi USD longs as well. So as you can tell, if you guys don't know, I'm kind of leaning more bearish on dollar. Now the only risk here is if the dollar still has a hotter CPI figure. I wouldn't necessarily mean that it's going to continue being a problem, but I think every central bank right now is more worried on the PCE side rather than just your general headline inflation, because there's a couple of things that they look at, right? And that would be the main things would be how hot is the economy. So, all right, sure, like the US have been more or less pretty good GDP wise, but they have been reducing their trade balances. They have been having weaker trade balance. I want to make that, excuse me, I want to make that a bit clear. For the most part, okay, GDP has been improving, but it's also improving because they had lesser imports. So yeah, that's that, but whatever. It's pretty hot, I guess. Still a good number. But I wouldn't want to say like it's blazing, like it's amazing and it's doing super well. Um, it's resilient. Let's put it this way. But some of the figures, they are being affected because of the fact that you had lesser imports. Simple as that, right? What inflation expectations are and unexpected shocks. So for the most part, unexpected shocks are not here. Those cost per shocks are out the table for now. Why? Well, oil prices are pretty much near pre-war levels. Okay, the only fear now is there has been some escalation between the Iran and US. If those escalation continues to grow, then fine. Okay, those are going to be a big problem. So we wanna wait, right? We don't wanna guess, because how are you gonna guess that? No one's gonna be able to predict that. Okay, so most important is if you have a narrative, stick with it if it makes sense. And then just manage. That's it. Okay, you're gonna lose some, you're gonna win some. Just make sure that your winners are winning. more than you're losing. Okay, but so fine, hot economy is there. Expectation for inflation to be weaker. Unexpected shocks are kind of out of the question. So where is the inflation? Right? It's yeah, we still have that. The only fear is that PCE, right? Those second rounds are going to be in the PCE data, right? Or they're already priced in anyways. But I don't think headline inflation is going to be strong. I think we're either going to be coming in as expected or below. And PCE, that one probably we may see an uptick, okay? Because the shocks from the energy side have now been passing through to the consumers, right? We are seeing higher prices in electricity bills, water bills, food. I mean, it's something that people, the consumers, are already facing. Even myself, right? I see the difference and the change in those prices now. You know, having to pay more for those, and those are something that you kind of have no choice but to accept, right? Because those are businesses that are sort of needed. Yeah. So I mean, now that's the issue, right? Is how long will these businesses sustain with these prices? That's the thing. Because if they continue to sustain, people keep spending, obviously inflation is still going to be a problem. So I hope you guys get where I'm coming at. So that's the risk. Okay, but I also want to bring out the dollar, the economic heat map. All right, show you guys the economic heat map here. So, we're at 60% bullishness. We were at 100% before, and we're starting to see a little bit of a downtick. Why? Manufacturing PMI, services PMI came in weak. ADP, non-farm payroll came in weak. These are recent data, and they came in weak. Okay, wage growth, nothing changed. Unemployment improved. Why? Well, not because not because like more people got jobs, but because the labor participation rate reduced. So what am I trying to say? In simple English, what that basically means is those who are unemployed are not actively looking, right? So the unemployment rate, basically the calculation is based on those who are unemployed who are actively looking for jobs. So we see a massive drop in unemployed people looking for jobs, which is not great. So this number is artificially improved. Okay. Okay, then we have initial jobless claims a little bit less. We're seeing some weakness in the dollar. I wouldn't say that this means the dollar is going to be bearish, but why am I doing that? Is because I think that possibly could be a macro shift, right? So I'm really waiting for CPI. That's the one that I really want to see next week. If we get weaker headline inflation, then the positions that I'm in right now are going to work phenomenally. Okay. And if they don't, if CPI comes in hot, then fine. We can say the inflation is still hot, but is it at its peak? Because forecasts are still saying, regardless, inflation is still gonna kind of trickle. I mean, start to weaken over time. Till probably 2027, we'll see cuts if there's no more escalations, no more crazy things that are happening. Then we'll probably see that. But in any case, I wanted to show this so you guys can have an idea, right? And so what happened is the dollar is actually getting on the top setups page, the dollar is actually getting a neutral reading now. So initially we had a score of 5, and now we have 2. Okay. So there's some weakness in the dollar for sure, but I wouldn't say that this is completely bearish. But a couple of things, right? Like I said, some shifts in the economic data. So we want to see, is it structural or is it just blips, right? That's one. Second, oil prices are very near pre-war levels. Third, inflation swaps at the front end are pretty much at lows. Okay. The forward curves for crude oil are lower in the back end as well. So everyone's expecting it to drop. Like, you know what I mean? Like, it is what it is. Like, there's nothing there that says we're going to continue staying hawkish. And that's the reason why we probably have not been seeing any dollar breakouts, at least this week, right? Shifts in economic data. Now, what is the inflation data going to show? Okay, because that's what's important. That's going to really piece everything together or destroy the trade. Simple as that. So yeah, I'm in gold longs as well. This one's a very slow mover, but I'm in gold longs. I'm in Kiwi longs as well. And those are some of the trades that we're looking at. So I'll probably make a video on CPI when it comes out. And we'll see what happens, man. I could be wrong, and if I'm wrong, I'm just gonna have to take the loss. It is what it is. But yeah, all right. Anyways, cheers, guys.